Just 2 years ago, Fort Myers was the epicenter of Florida's housing frenzy. Now, that same market is spiraling into a crisis even the governor can't ignore. Home prices have plunged 11% since 2022. Over half of sellers are slashing their listings, and nearly 8% of homeowners owe more than their homes are worth. With equity vanishing overnight and political pressure mounting as foreclosures creep up, the governor of Florida has reached a public breaking point. What triggered the collapse of a city once hailed as unbeatable? And could this disaster spread even further? The real stakes of the Fort Myers crash are only beginning to surface. By the spring of 2025, Fort Myers stands as the starkest example of a Florida housing market in freefall. Median home values have plunged 11% from their pandemic peak, wiping out years of paper gains in less than 24 months. Inventory has exploded. Over 14,500 homes are now listed for sale across Cape Coral and Fort Myers, a number not seen since the aftermath of the last crash. More than half of those listings have already been reduced at least once, with some sellers slashing prices by tens of thousands just to attract a single offer. The pace of decline is accelerating. In February, prices dropped 6.5% month over month. March saw a 7.1% cut. By April, the drop hit 7.8%. National housing trackers now rank Fort Myers among the worst performing markets in the country. For homeowners who bought at the height of the boom, the math is brutal. Nearly 8% now owe more than their homes are worth, the highest share in the nation. For a family that bought a $400,000 home with a minimal down payment, selling today would mean bringing cash to the closing table just to escape the debt. The surge in inventory tells its own story. In 2023, there were just over 5,500 homes on the market. By 2024, that number had doubled. Now it's nearly tripled, with rows of for sale signs stretching through neighborhoods that were once magnets for out-of-state buyers. Days on market, which once hovered around 2 weeks during the frenzy, have stretched past 3 months. The spread between asking and sale prices has widened, and appraisers struggle to find recent comparable sales that justify even the new lower offers. Behind these numbers, the consequences are mounting. Foreclosure filings are on the rise. Small builders report project stalls and layoffs as unsold homes pile up. For every seller cutting their price, there's a buyer waiting for an even deeper discount, convinced the bottom hasn't arrived. In Fort Myers, the data is no longer abstract. It's a daily reckoning playing out on every block. For buyers watching from the sidelines, the numbers in Fort Myers translate into real-life consequences. The median home price now hovers near $375,000. But that headline figure hides a deeper affordability crunch. Despite falling prices, higher mortgage rates, and ballooning insurance premiums have pushed monthly payments far beyond what many local families can handle. For a typical home purchased at last year's prices, the monthly bill has climbed by hundreds of dollars, erasing any relief from recent discounts. First-time buyers, once drawn by the promise of Florida's sun and space, now face a stark reality. Carrying costs for a modest property can easily top $2,600 a month, a 44% increase from just 2 years ago. Even as more homes flood the market, the gap between what buyers can afford and what sellers need to break even grows wider each month. The dream of home ownership, so accessible during the pandemic boom, is slipping out of reach for many. Negative equity isn't just a statistic. It's a daily worry for nearly 8% of local homeowners. Those who bought with small down payments during the peak now find themselves trapped, unable to sell without taking a loss. For families who stretched to buy at $400,000, today's market means owing more than the house is worth with no easy way out. Lenders are tightening standards, requiring higher credit scores and bigger down payments, leaving even fewer options for buyers hoping to enter the market. Investors, too, are feeling the squeeze. Many who snapped up properties in 2021 and 2022 now face shrinking rents and rising vacancies with little hope of flipping for a profit. Some are offloading homes at a loss, while others hold on, hoping for stabilization that remains stubbornly out of sight. Each new price cut chips away at confidence. And every unsold listing is a reminder that risk in Fort Myers is no longer theoretical. It's personal and it's growing. By the summer of 2020, Fort Myers was swept up in a migration wave few could have predicted. Mortgage rates dipped below 3% for the first time in decades, unlocking cheap credit for buyers from every corner of the country. Remote workers newly untethered from city offices scoured listings for homes with space for a backyard and a home office. Retirees, families, and young professionals arrived in droves drawn by Florida's promise of sun, low taxes, and a fresh start. United Van Lines ranked Southwest Florida among the nation's top inbound destinations, and Lee County alone recorded more than 17,000 net new arrivals in 2021, double the pre-pandemic average. Every data point painted the same picture, a region transformed by newcomers. The DMV processed over 11,000 out-of-state license swaps in a single year, while census estimates showed Lee County's population swelling by more than 23,000 between April 2020 and June 2022. Neighborhoods that once sat quiet saw moving trucks lining the streets and construction crews racing to pour new foundations. Builders couldn't keep up. Zoning caps and impact fees were relaxed, fueling a surge in permits and new subdivisions that stretched east and south of the river. For buyers, the competition was fierce. Homes listed on Friday often had multiple offers by Monday, many from out-of-state buyers making cash bids, sight unseen. Agents fielded calls from New York, Chicago, and Atlanta with clients eager to escape high costs and harsh winters. The influx pushed inventory to record lows and sent prices soaring. Between 2020 and early 2022, median home values in Fort Myers jumped nearly 40%, the fastest rise in local history. Optimism fueled the frenzy. For every family unloading a moving van, another remote worker signed a contract, convinced the boom would last. Lenders wrote loans at a pace not seen since the last cycle, and the sense of urgency fed on itself. In those years, the dream of Florida living felt within reach for anyone with a laptop and a down payment. But as the arrival wave peaked, cracks in the foundation began to form, setting the stage for the volatility that would soon follow. Private investors and builders fueled the Fort Myers boom with a speed and intensity that left even seasoned agents stunned. By late 2020, corporate buyers, some backed by Wall Street funds, were snapping up entire blocks of pre-construction homes before the first slab was poured. Local builders, flushed with deposits, worked overtime to keep pace. Permitting offices processed a record volume of applications, often greenlighting dozens of new subdivisions in a single month. Zoning boards eager to capture tax revenue and keep up with migration, relaxed limits and waived fees, clearing the way for rapid expansion on the city's outskirts. Open houses became spectacles. Agents recall lines stretching down the sidewalk with buyers offering above list price just to secure a spot in a lottery for the next available unit. Some houses sold sight unseen, flipped between investors twice before a single family ever moved in. At the height of the frenzy, crews poured foundations day and night, and neighborhoods that had sat dormant for years suddenly buzzed with trucks and heavy equipment. Title records from 2021 and 2022 show private equity firms like Invitation Homes and Premium Partners acquiring hundreds of properties in Lee County alone, often bundling purchases to turn into rentals or flip for quick profit. Speculators, emboldened by soaring values and easy credit, pushed prices higher with every transaction. Even small local contractors joined the rush, expanding into new subdivisions and hiring crews at a pace not seen since the mid-2000s. The sense of urgency was contagious. Builders raced to lock in material contracts before costs could rise again, while investors scoured MLS feeds for the next undervalued listing. The promise of endless demand seemed to justify every risk. For a brief window, Fort Myers felt like a place where no one could lose. But the same forces driving this exuberance planted the seeds for oversupply. As permits multiplied and investor money poured in, the number of new homes under construction ballooned. By early 2023, Entire developments stood half-finished, waiting for buyers who never arrived. The speculative pressure that once fueled the boom had set the stage for the flood of inventory and price cuts that would soon follow. In 2019, Lee County commissioners faced mounting pressure from builders and real estate lobbyists eager to capitalize on the flood of new arrivals. Council minutes from that spring reveal a heated debate over impact fees, the charges developers pay to help cover schools, roads, and utilities for each new home. By the end of that year, the county voted to roll back these fees, arguing that lower costs would keep construction humming and meet the region's unprecedented demand. Zoning boards followed suit, easing density caps and streamlining approvals for large-scale subdivisions stretching beyond the city's traditional footprint. Local watchdog groups, including the Southwest Florida Citizens Alliance, raised early alarms. Internal emails later obtained through public records requests show staff and some council members questioning whether the rapid-fire approvals were sustainable. One planning memo from October 2020 warned that waiving fees could leave infrastructure underfunded if the market turned. While a city council member wrote, "We're betting on endless growth. What happens if it stops?" The policy shift triggered a construction boom. Developers broke ground on thousands of new units between 2020 and 2022, banking on forecasts of continued migration and strong investor appetite. But as prices soared, national analysts flagged Fort Myers as a market outpacing local incomes and rental yields. In late 2021, a Parcel Labs report highlighted that price-to-rent ratios in Lee County had climbed to levels rarely seen outside bubble-era markets, warning that investor demand could evaporate if rents failed to keep up with soaring home values. By early 2022, some institutional buyers had already begun to pause acquisitions, citing internal risk models that flashed red as inventory climbed. Yet, local officials pressed forward, confident that the migration wave would continue. As late as March 2022, county leaders celebrated record permitting numbers at ribbon cuttings, even as internal reports hinted at oversupply risks. The same policies that fueled rapid expansion, lower fees, relaxed zoning, and fast-tracked approvals would soon be blamed for amplifying the glut of unsold homes now weighing down the market. Community activists reviewing the aftermath point to the paper trail left in council minutes and planning memos. The decisions made in those years, they argue, shifted the region from healthy growth to runaway speculation. For families now facing negative equity, and for neighborhoods dotted with half-finished developments, the consequences of those choices are no longer abstract. They're built into the very streets and subdivisions that once promised opportunity. Insurance premiums in Fort Myers have become the silent force reshaping the housing crisis. After Hurricane Ian, annual costs for a typical home jumped from under $2,500 to well over $6,000. With some waterfront properties now facing quotes above $20,000. For many, the shock isn't just the price, it's the uncertainty. Local insurance agents describe a landscape where coverage is no longer guaranteed. Private carriers have withdrawn from entire zip codes, leaving thousands of homeowners to scramble for policies with Citizens, the state-backed insurer. By early 2025, Citizens policy count statewide approached 1 million, nearly double its pre-storm level, and agents warned that another major hurricane could push the system to its breaking point. Premium hikes have rippled through every transaction. Buyers discover that a property's monthly payment can swing by hundreds of dollars based on a single insurance quote. Lenders now routinely reject mortgages for homes where the annual premium exceeds 5% of the property's value. Deals fall apart at the closing table not because of price or inspection, but because insurance is unaffordable or unavailable. One seller, after accepting an offer, watched the deal collapse when the buyer received a $24,000 premium estimate, almost as much as the mortgage itself. The appraisal process has grown equally volatile. During the boom, appraisers faced pressure to justify soaring sale prices. Whistleblower accounts published in local media describe how some homes were valued 20% above realistic comparables, with lenders eager to close deals before the market cooled. Now, as prices fall, appraisers struggle to find recent sales that support even the discounted offers. The result is a growing gap between what sellers expect and what banks are willing to finance, leaving homes to linger on the market for months. Insurance and appraisal shocks have exposed a hidden layer of fragility in Fort Myers. For buyers, the risk isn't just overpaying. It's getting locked into a property with unpredictable costs and uncertain resale value. For sellers, the obstacles stack up. Price cuts, failed deals, and the constant threat that the next storm or policy letter could wipe out whatever equity remains. These pressures are flooding the market with inventory, setting the stage for the next wave of distress. MLS records for May 2025 show 14,580 homes listed for sale in Cape Coral and Fort Myers, a figure that dwarfs every other Sun Belt city this year. The supply surge is most visible in neighborhoods built during the pandemic boom. Entire blocks of identical stucco homes, many never occupied, now sit with faded for sale signs and empty driveways. The average days on market has climbed above 90, triple the pace seen during the frenzy of 2021. Even entry-level properties once snapped up in bidding wars now linger for months as buyers hesitate. This glut isn't limited to resale homes. Builders who once raced to keep up with demand now face a backlog of unsold inventory. Some have slashed prices by $50,000 or more on new construction, offering incentives from closing cost credits to free appliance packages. Yet, for every home that finds a buyer, several more are added to the listings each week. The flood of supply has shifted the balance of power. Buyers now dictate terms, negotiating steep discounts and repairs that sellers would have scoffed at just 2 years ago. Price cuts are no longer reserved for fixer-uppers. Even pristine move-in-ready homes are marked down, sometimes multiple times before attracting serious interest. The data paints a stark picture. In 2019, Fort Myers averaged just over 5,000 active listings. By 2023, that number had doubled. Now it has nearly tripled, pushing the region's inventory to sales ratio to levels not seen since the aftermath of the financial crisis. More than half of all current listings have already seen at least one price reduction. The spread between list and sale prices continues to widen, erasing years of appreciation in a matter of months. For real estate professionals, the challenge is clear: finding buyers willing to commit in a market where patience is rewarded and tomorrow's price is likely to be lower. The days when sellers could dictate terms are over. In Fort Myers, the numbers have turned the market on its head, and every new listing adds to the pressure. Construction crews that once worked around the clock now gather in empty lots, waiting for calls that rarely come. In the spring of 2025, dozens of small builders across Lee County filed for bankruptcy or quietly shut their doors. The Windrest development, planned as a showcase of pandemic-era prosperity, sits half-built. Rows of concrete shells and overgrown driveways abandoned after the developer ran out of cash. For every subdivision that reached completion, another stands in limbo, with contractors owed months of back pay and suppliers left holding unpaid invoices. Laid-off workers line up at job fairs that offer fewer positions each month. Miguel, a framing carpenter, spent 15 years building homes in Fort Myers. In March, he was let go along with most of his crew after their employer lost 2 major contracts. He's since picked up occasional renovation work, but steady jobs are gone. A local drywall company once booked out for 6 months now posts daily on social media, advertising discounts for any project, no matter how small. The ripple effect stretches beyond construction. Equipment rental yards report a surge in repossessed machinery. Hardware stores, once bustling with contractors, see their aisles empty by noon. Rental vacancies are rising in tandem with unsold homes. Data from April shows the local rental vacancy rate climbing above 12%, up from just 5% 2 years ago. Apartment complexes built for incoming remote workers now offer move-in specials and months of free rent. Some investors unable to find tenants or buyers have walked away from properties altogether, leaving management companies to handle unpaid utility bills and overgrown lawns. The promise of easy money in rentals has faded as quickly as it arrived. Landlords who banked on endless demand now field calls from tenants asking for rent reductions or threatening to leave for cheaper units down the street. The slowdown has exposed just how dependent Fort Myers became on relentless growth. For every headline about plunging prices, there are families and small business owners recalculating their future. The construction boom that once brought prosperity has left behind unfinished homes, empty rentals, and a workforce searching for stability in a market that no longer needs them. By May 2025, the conversation in Fort Myers isn't just about falling prices. It's about the families caught in the undertow. The median home now sells for $361,000, down nearly $80,000 from the pandemic peak. Nearly 8% of owners owe more on their mortgage than their house can fetch, the highest rate in the nation. For those who bought at the top, the numbers are punishing. A couple who closed on a $400,000 home with 5% down faces a hard truth. Selling at today's price means bringing $20,000 or more just to pay off the lender. Diaries shared with local media describe the daily stress. Checking Redfin, watching equity slip away. Fielding calls from agents urging another price cut. Buyers once desperate for any foothold in Florida now drive a hard bargain. With inventory flooding the market and days on market stretching past 3 months, offers routinely come in 10% below list price. Negotiations hinge on every detail. Roof age, insurance quotes, hurricane windows. Some buyers demand closing credits or insist on repairs that would have been laughed off during the boom. One first-time buyer, after months of searching, secured a move-in ready house for $36,000 under asking, plus a year of paid insurance. A deal unthinkable 2 years ago. For sellers, the reality is sobering. Price cuts are the rule, not the exception. More than half of all listings have been reduced, some 3 or 4 times, as owners chase a shrinking pool of cautious buyers. The spread between what sellers want and what buyers will pay grows wider by the week. Appraisers struggling to find comparable sales often side with the buyers, forcing further concessions at the closing table. Monthly payments, too, have soared. Even as prices drop, the cost to carry a typical mortgage has jumped 44% since 2022, driven by rising interest rates and insurance premiums. For families already underwater, the payment shock is a double blow, trapped by debt, squeezed by bills, and watching as the American dream of homeownership turns into a source of anxiety. In Fort Myers, equity isn't just a line on a statement. It's the difference between stability and a future filled with hard choices. Foreclosure filings in Fort Myers have doubled in the past year, an echo of the distress that swept through this region in the aftermath of the 2008 crash. As of April 2025, pre-foreclosure notices and forced sales are climbing block by block, with nearly 8% of mortgages now underwater, and a growing share of owners unable to keep up with payments. Local agents describe a wave of short sales and distressed listings as families who bought at the peak confront the reality that their homes are worth less than their loans. For every voluntary seller, another is now facing the threat of losing their property outright. The pressure isn't contained to Lee County. Across the Sun Belt, warning lights are flashing. In Austin, foreclosure starts up 38% year over year, and in Raleigh, the rise is 22%. Both cities saw inventory climb and prices soften, but neither matches the scale of distress now visible in Fort Myers. Economists point to the near 8% underwater rate in Cape Coral as the highest among major U.S. metros, a figure that dwarfs the 2 to 3% seen in Texas and North Carolina. While Austin and Raleigh benefit from steadier job markets and lower insurance costs, their early warning signals, rising listings, more forced sales suggest that the risk is spreading. Analysts warn that the mechanics driving Fort Myers' downturn, overbuilding, speculative buying, and insurance shocks are now rippling outward. National foreclosure data shows Florida leading the nation in new filings, but the Sun Belt as a whole is trending upward. Lenders have begun tightening credit in other high-growth metros, wary of repeating the mistakes that left so many Florida homeowners exposed. Investors who once saw the region as a safe bet are pulling back, and builders in cities like Phoenix and Dallas are pausing projects as sales slow. Governor Ron DeSantis has faced mounting pressure as the crisis deepens. In a series of press conferences, he has promised swift action, directing emergency housing aid to Lee County, pushing for insurance reforms, and calling on federal agencies for additional support. Footage from a recent event in downtown Fort Myers shows the governor flanked by local officials pledging to stand with every family facing foreclosure and fight for stability in our communities. Behind the scenes, state agencies scrambled to deploy relief funds and expedite claims. But the scale of the problem threatens to outpace every intervention. Economists caution that the next 12 to 18 months will be critical, not just for Fort Myers, but for the broader Sun Belt. With investor appetite fading and affordability stretched thin, the risk of further contagion remains high. For now, the epicenter sits on Florida's Gulf Coast, but the tremors are being felt far beyond. The reckoning in Fort Myers is no longer a local crisis. It's a warning shot for every market that chased the boom without a safety net. In April 2025, home prices in Fort Myers have fallen 7.8% year-over-year, capping an 11% drop since the pandemic's peak. Over half of all listings have seen price cuts, and nearly 8% of local homeowners now owe more than their property is worth. These numbers mark the sharpest reversal in the region's modern history. The documentary traced the surge of migration and cheap credit, the role of policy decisions, and the mounting strain from insurance and oversupply. Yet, despite extensive public records and interviews, key details about internal state deliberations and the true scale of future foreclosures remain undisclosed. The crisis in Fort Myers now stands as a documented case of how rapidly market conditions can turn, affecting thousands of families and prompting urgent government action. The full impact for homeowners, buyers, and Florida's leaders continues to unfold. As of today, the evidence leaves one fact clear. The Fort Myers housing collapse is no longer a warning, but a reality with consequences still emerging.